Good afternoon, everybody. We're here with another episode of the Acre Advantage podcast. This afternoon, we're going to talk a little bit about grain markets. My name is Michael Widener. I'm the Director of Grain Origination and Producer Strategy at Landis Cooperative. And joining me today is Scott Stoller. Scott, you want to introduce yourself?
Sure can. Thanks, Michael. Thanks for having us today. Scott Stoller. I'm a grain originator and merchandiser in the Eastern Corn Belt. So I reside in northern Illinois around the Princeton area, Walnut area, and buy grain in northern Illinois, northern Indiana, southern Indiana, central Indiana, the whole southern Illinois for our McLeansboro elevator, and also for our Rushville, Indiana elevator. This is actually just crossed the threshold of my 27th year in the grain business.
You're dating yourself. I'm not at 27. What am I working towards? 11? Coming up on 11. So yeah, I'm originally born and raised in Illinois. Started my career with Scott about 11 years ago already, and this is our second stop together. So kind of a little throwback here today on the Acre Advantage podcast, getting together with Scott and visiting on kind of what's going on across the Corn Belt, stretching from Omaha all the way to Columbus, touching all the I-states and everywhere in between. So really appreciate you joining us, Scott. So what we wanted to touch on really quick today was a little bit of an update on weather and early planting progress. Obviously, we're sitting here Monday. We're going to get planting progress here this afternoon. As a nation, would expect that that's going to come in above the 5-year average, as that has been the trend. Obviously, we've had some weekend rains and weather roll through Iowa and pockets of the Corn Belt that have presented some challenging weather issues, some torrential downpours. I know I talked to a grower today in northern Iowa who had some hail on some beans that are going to be replanted. And then Scott, you can kind of speak to the Eastern Corn Belt on what weather and planting progress are like there.
Yeah, so it's been a really interesting mix this year. It's very similar to Iowa and our members in our core members in that state. But when you look at like the northern third of Illinois, really just got planted over the past, call it a couple weeks. With an end date around here of about May 17th or so. So call it mid-May, almost 99% of the corn planted in the northern third of the state. The middle tier of the state of Illinois has been, they could go early, but they had 2 to 3 weeks of where they had to stop. Too much water, just couldn't get in. Soil conditions were tough, so they were a little later than normal. Far southern Illinois was probably one of the earliest it's ever been, and so we had corn going in the ground in March. We won't talk about that because that's probably not the crop insurance date, but there for sure was beans going in the ground in March. And when you flip over to the state of Indiana, western Indiana had some early planting dates as well, much the same as central Illinois, but majority of the southern half of the state got most of it in here over the last couple of weeks as well, finishing in around mid-May. Northern half of the state's struggling. That Indiana-Wisconsin or Indiana-Michigan state line is really struggling getting the crop in and just a lot of water and just keeps coming at them. So when you look, we're blessed at Landis, right, Michael, because we've got this wide array of geography we get to cover and see, and that does nothing but help our farmer members.
Yeah, absolutely. Yeah, and speaking of planting progress in Iowa, obviously most on the listening to the podcast today here know how that's gone. A little bit of a later start based on too much moisture early, but guys were able to get in here mid to late April, kind of button up here the last 7 days and really put a bow on things here last week as we had some really great favorable weather. This weekend we saw some precip move in and some heat, which is really what this crop needed, especially the early planted acres to kick off and get out of the ground, and you're starting to be able to roast some things here all of a sudden too. So, would expect some great progress this afternoon. Probably getting close to the point here, probably next week or the week after, where we'll start to get some, we got the planting progress numbers, but also condition scores too on how the crop's looking coming out of the ground here. So, looking back in the rear view mirror, we'll look at the May USDA crop report. Obviously, we had a monster crop report last week. That's kind of a first look at the new crop balance sheet for the U.S. side of things. Just touching through some highlights there. U.S. corn carryout was projected at sub 2 billion bushels, kind of a key number psychologically that we would like to see us slip under. That's pretty supportive to the market. And then just based on some of the crush build out that we are seeing across the nation domestically, you saw U.S. soybean carryout slip under or close to 300 million bushels, which is fairly snug, especially with some of the news that we would have got yesterday, Sunday, from on the U.S.-China demand front. Scott, do you want to speak to that a little bit?
Yeah, so coming away from President Trump and President Xi's meeting in China here in mid-May, we had it was a $17 billion over the next 3 years of money that's going to be spent by China on U.S. ag products. The hard part is just what's that umbrella of products going to be? Not necessarily deciphered quite yet. However, obviously soybeans being a big component of what we do with China, beef might be as well moving forward. Not that we have a ton of beef in the U.S. to sell right now, but that is potential. And then obviously corn and some other small grains too we could look at down the road.
Yeah, absolutely. It seems like obviously it caught fire here today, Monday. We had a rough Thursday, Friday, as really nothing positive came out of those meetings and talks. But thankfully, we did get some news out of the White House yesterday that talked about that $17 billion deal that they're going to annually buy some type of ag products from us through 2028, which is really got the market cranked up here today. I think corn was up 15 to 20, really recovering off some nasty lows from last week, and beans added 30, 40 cents. So I know talking to some farmers in Iowa today, they were definitely lamenting going home Friday and kicking themselves and thought they missed it, but they're getting a second chance here and hopefully taking advantage of this rally here today and hopefully some more ups this week.
Well, and I
So
think,
with that
Michael, I
said,
think that's one thing that the emotional roller coaster we've had here over the last 4, 5, 6 trading days has just been insane. And so it's our chance now as Landis originators and guys that have been in this business for any length of time to try to make sure we tamp down all the kind of the noise that's out there in the marketplace and allow us to help the grower to go, hey, Mr. Grower, this is a nice opportunity on old crop. Let's not lose that. The new crop's going to be, we don't know. There's a lot of unrest in the world. We've got to make sure we get some cost coverage and things like that. Old crop, we know it's time to move on. And I know you and I will dive a little bit deeper into that here, a little deeper into this podcast.
Yeah, and that's kind of where I was heading with the conversation, Scott. It's kind of the dilemma, for lack of better terms, of the unpriced grain that's sitting on the farm, maybe even in our space, right? Probably cool off just a tick in terms of percentage, but it sure feels like there's probably 35% of the corn crop still in farmer hands on the farm. And maybe that's worth just a tick lower, but you can definitely feel it in Iowa with basis values. And then on top of that, there's maybe 10 or 15% of beans out there yet. I know sometimes in pockets of the state, those are tough to find, but we are seeing some, as we get closer to $12 cash into the processor, we're starting to see some of those beans come out of the woodwork that have been hiding here for a little bit. So, even talking to a few growers last week, there's still some bags in central Iowa that guys kept off the market all this time and still have not moved them or picked them up, which is pretty amazing to think about. So it'll be interesting, Scott, kind of what you talked about. Is there a 10-can harvest? What does that look like as we move through June, July, and August?
Well, and with that, Michael, I think it leads to the next point of when you just look at how grains flowed around the country this year. I think that's an important component on understanding the demand component for growers in Iowa and how corn disappears. It's when you look towards the eastern side of the Corn Belt this year, there's been all kinds of demand. The crop in the southeast was light last year. We've got exports going off the East Coast, which hasn't happened in years. We've got trains going from Pleasant Hill, Des Moines, Iowa to Virginia this year. That's just not the norm. So you got this tug of corn to the east. And it's mainly because it's so cheap in Iowa and in Nebraska and Kansas and in the Dakotas. It's, as we look to what's left on the farm, just know sooner or later the tin can, grain coming out of growers' bins is going to move in Illinois and Indiana, Ohio, Michigan in June and July as well. So that's going to happen. That's going to tamp down basis levels a little bit. And so that does not exactly help the Iowa grower. And so that's what we have to be cognizant of knowing, kind of looking out and going, okay, what is best? We've got this board rally, over the last couple of weeks, drop off. Now we're back to within close to a dime of the highs. Is this something we need to be taking advantage of on the old crop side? Because most everything is known. Outside of diesel fuel, getting it from grain bin A to wherever the terminal is, Landis Elevator A. It needs to make sure just need to make sure that we get all of those costs structured in and get that revenue side set, because world's a different place today, right? I mean, we got a whole lot of stuff going on in the world today that we can't control, the grower can't control, and so we have to take some of these unknowns out so we can. I had a mentor in a grain business in right on the Illinois and Indiana border. He used to say, "You got to get on the other side of the bushel," meaning you can't think about the 26 crop that just went in the ground if you're not done thinking about the 25 crop yet. And it hangs over your head. It stops the decision making process. And the deeper we can get through the 2025 crop and move on to 26, the better we are.
Yeah, agreed wholeheartedly, Scott. I mean, I think you kind of touched on it, but I mean, just thinking through and talking through the different values we're seeing on the heavy basis side of things, the entire post-harvest outlook in the Western Corn Belt, especially in Iowa, just based on all the stocks all around us, which is something we've talked about since January, February, and some outlook meetings we did. It's really kept basis tamped down. You're talking 20 to 30 under. Yeah, you've got the ethanol guys that kind of poke their head up here and there and give you a quick ship bid to look at, but for comparison's sake, where you're at in the Eastern Corn Belt, specifically Eastern Indiana, I mean, you're talking 20 to 30, sometimes even 40 over values. So that really does paint the picture that you alluded to in terms of the discrepancy in bids, Western Corn Belt versus Eastern Corn Belt.
Let's talk why for a second, though, too. I think that's important here when you talk basis levels. Iowa, for the most part, has been some of the best in the Midwest states over the last 10 years. So why is it cheaper this year? Most of the corn is in Iowa. Is it 60%, I believe is the number, is exported out of the state, meaning it's going on the BN or UP or subsidiary lines and going somewhere else. Somewhere else means going through the states of Nebraska and Kansas, Texas, and places like that, South Dakota. And those places all had big crops last year. Not just big, hellaciously big, and maybe record big in all those other states. And so then when you look to the east, the state of Illinois was it wasn't our top year ever. It was a 2 or 3 or 4, somewhere in there. And with the further east you got, the lower yields went. And I think that's kind of important to know. And when you look just the broadness of the Corn Belt, everything in the east is older infrastructure. And I say that meaning food companies, wheat mills, older corn processing plants. And so it's very mature when you look towards the east, and towards the west, it was part of the ethanol boom. You had bigger plants in the big dogs of like Cedar Rapids and Columbus, Nebraska, and Blair, Nebraska, and places like that. But from a broad standpoint, a lot of stuff in the west always used to walk off the farm. In the east, it went to food companies. And so that today, that's why if we all of a sudden we have a lower production year, things just get silly really fast. And when you look to the west, this year with the drought that's in Kansas and Nebraska and Texas and Oklahoma, it could be fun on new crop on some of those basis levels as we look at the growers that we serve, our farmer members. And now, if we produce a big crop, that still means we'll have fall basis levels. But the quicker we can get rid of this crop and get it tucked somewhere else outside of the state, the better we are.
Yeah, I agree wholeheartedly with that, Scott. I mean, you kind of spoke to it. I think things could get interesting based on some of the dryness that's out west and how that plays a role into this new crop we're about to harvest or going to harvest this fall, and how that looks into early 27. But you spoke to it, I think, and highlighted it well. It's the how do you get behind the bushel? And until we get behind this 2 billion bushel carryout and all the on-farm stocks that are sitting in the Western Corn Belt, it's going to be a slug, I think, to get through this thing, unless we get a heck of a U.S. weather issue that really changes the entire dynamic and balance sheet of this thing. And, until then, it's going to be tough for these growers to get behind the bushel for sure, to get focused on the next crop.
The struggle I'll have when the two corn belts are so different, and it'll be interesting to see how grain moves here. Planters are pretty much put to bed now. How does corn come out of the bins? The grain industry calls it a tin can harvest. Just time to create cash flow on the backside for growers. And did you make money or not? It just so happens that nearby corn futures are hanging out in the 470s, almost 80. And so there's going to be an opportunity to make money on the balance of the old crop that's out there. So just take advantage of it. Don't get caught in the I believe it was Dr. David Cole from Virginia Tech that, don't get caught in unbridled want for more. And that's, I'm sure there's plenty of Iowa State economists that have said this, a very similar thing. And I know he has because he's done it. He's been in Illinois, putting meetings on over the years too. But just don't get caught in the pursuit of more when you don't really know what more might be.
Yeah, great point. And you spoke to that earlier too, like the shifting farmer behavior. How can you get behind the old crop bushel to look at the new crop? And that's kind of where I want to shift the conversation moving forward. We've seen growers do a pretty good job of laying into new crop sales, give or take 5% each side. Would guess the growers probably 20% sold on new crop corn and beans. There's plenty of folks that haven't done much, but then there's plenty of folks that they got burnt by not doing a lot of forward marketing the last couple of years, and they wanted to make sure that they didn't do that again this year. And you've seen them really hit some of these sales targets, accelerate the percentage of sales in March and April. And we've already sold these levels, so now they're kind of sitting back. Okay, let me get my crop planted. Let me see it get out of the ground, and what's my next move from here? What do I look to supplement my current sales with? We've seen a lot of growers step into such things as averaging contracts for the first time ever. Those are working well for us. Growers entertaining new concepts that our team's pushing on the origination side, like bonus premiums and accumulators. From here, what's the next move for the farmer, Scott? How does he approach this next 20-30% that he should probably get sold between now and Father's Day, let's say?
Yeah, I think it's always it needs to be a conversation between the grower and your grain marketing consultant, your originator, whoever that person is that is your confidant in that relationship to make sure you go, okay, Mr. Grower, what are you comfortable getting to sold wise? Are you comfortable getting to 50% sold by the time we get to mid-June? And if you are, then let's take the steps to do that now. Because you know what, the last 2 years, we've made May highs. I know you'll have the stats here in a second, but we've made very early growing year highs, and we don't want to lose sight if we would follow a 2014 chart and top in mid-May and just slide the rest of the year. We don't want to be caught with our hands in our pockets, and so that's the most important part. We've got to get rid of some of those. Cost structure we know is coming at us, everything that has already been thrown out there between all the variable type costs, and let's get some of that covered and move towards there. Now it's tough up here because a lot of the time it's in your heart, right? I mean, most growers, you can't separate the heart from what needs to happen on the business side of things, and that's where we want to help and try to come in and make sure we talk about the probability of stuff happening and how often it has occurred, and frankly just how has the market changed in the last 5 years and the last 10 years? I know you've heard me say this, Michael. I can't buy grain the same way I bought grain 27 years ago. That just can't happen. Everything's changed. And so as the grower, we want to make sure that you're not selling grain the same way you did 25 years ago as well, because that may not lead to success. And so how can we set you up for success in the quickest way possible is what we want to get to.
Yeah, absolutely. Great points. And like I said, we've got a pretty good foundation as in terms of where we set our growers up into. No one can really predict when bombs start getting dropped in the Middle East. There's definitely some growers that probably wish they had a few sales back and would have waited just a little bit longer. But at that time, it was the right thing to do to manage that price risk and take advantage of some of the rallies, right? You spoke to it when our highs are getting set. Last year, we had a February high. Highly abnormal, not something that we see. The year before we had a January high. And this year so far it looks like it's going to be a little bit more seasonal. That allows us to manage risk a little bit better. And really from my seat, I'm passionate about this side of things, guys. It's all about locking in price floors, defending your downside risk, managing upside opportunity via some of the various risk management tools that are out there that hopefully our team can come alongside some of the growers that we work with in the 4 states we cover to help them come up with a marketing plan and be there before the market gets there, right? No one expected today's price movement, and we got some fireworks today. And so how can we think 2 steps ahead and be ready for the next move? Because the reality is all this uncertainty that we talked about on this session today and all the volatility we're seeing is just a lot of opportunity for not only Landis as a cooperative, but also the grower and what he can do to reach his goals.
It's
So
in. You talk about how Landis can win and the grower can win, and what does that mean? At the end of the day, we help be the paycheck to the grower. That's how the grower gets paid is whatever we're paying for grain or end users paying for grain that day. Now, how does Landis get paid though? That's important to us. The earlier that we can figure out how to know what's coming at us and merchandise that grain, that's what is really, really important to us, because now we can go out there to end users, a California dairy, a feed yard in Texas, wherever it might be. And if we know we have that owned and we have the chance to trade that position off, why not? And to do that 3 months before harvest, 4 months before harvest, 7 months before harvest, that's huge for our bottom line too. So that's how it becomes a win-win. Now, when the grower wants to move grain tomorrow and he moves it, and we have to figure out, can we make money the next day? It's just a really tight window where that does not work out very well for anybody.
yeah, no, you definitely got to separate the two and kind of pull them apart. It takes time. Time's always our friend. And again, the time to the farmer side of things, the time above break even could be pretty short lived here. I think you spoke to it a few times already, how tight things are in the ag space and at the farm gate with high inputs, low commodity prices. I mean, our time above break even to making money could be short lived here. And the reality is, it's going to get emotional here. It already has been the last 72 hours between Friday and today from the grower side. So how can we just make this decision making process for growers more mechanical, less emotional, and really just defining what matters, right? How can you identify your cost production, look at some goals, look at some targets, use working offers, and really just keep your operation moving forward and not taking steps backwards, because these are the years we can't afford to do that.
Well, and I think that the biggest piece right now, Michael, is going, okay, what's stopping you from selling? If it's just because I'm scared I'm not going to produce it, I'm scared what's going to happen in the world. Well, there's contracts to help make that happen. So you look at in both of those scenarios where you go, I don't know if I'm going to produce it and I'm scared the market's going to go higher. Let's look at a minimum price contract, which is just selling the grain and buying a call option. And so how can we help facilitate to take care of some of the heartstrings that get tugged and make a business decision, because it's very, very difficult to make that business decision if you're not being able to sleep at night. And that's a big piece. So there's lots of different ways to go about it, and let us help with that.
Yeah, absolutely. In wrapping up our session here today, Scott, on the podcast, just a couple of things, final thoughts from my seat, and then I'll kick it over to you to wrap this thing up for us today. The reality is the odds and probabilities here in the marketplace point to the highs already being in, if not scored over the next 30 to 60 days. With some of the new news from the White House yesterday, I'm guessing the highs aren't in, and we want to try to keep working higher. So being prepared the next 30 to 60 days, building out your marketing plan and working offers is going to be critical. As we know, speaking to the odds and probabilities, 60% of the time we see highs in May and June over the last decade. So the window's coming up for that to occur. You're looking at, we're a couple pennies away today from the $5 board price situation on D's corn. You look at some of the odds and stats behind that, and you're talking 80% of the time we're below that during harvest. So, to me, if I'm working with a grower in one of the three I states, I'm letting him know every time we're above $5 corn, because he probably needs to do something, or at least entertain the thought of doing it, right? Not selling grain, that's a decision too. We make that decision a lot, as whether it be the merchandising side or the grower at the farm gate selling grain. But from our seat at Landis, origination, everybody on our team, it's making sure the grower's alert of his opportunities and he's taking advantage of them. And then the last thing I'd say, Scott, on the bean side, same type of thought process. We typically get some highs in this May, June, July window for 50% of the time the last decade, and then no different than corn. We're below $12 just over 70% of the time over the last decade. So want to make sure we're taking advantage of these prices and any further upside that we do get here the next couple months.
Touch on wheat real quick too, just because I know it's not grown in Iowa, but we do have growers in southern Illinois and eastern central and eastern Indiana that grow wheat. Every day of the year, there's a combine running in wheat somewhere in the world. And so the seasonality of wheat is not the same as what it is in corn at all. And so anytime you see the market rally like we did last week, and in essence, $1.50 jump over about a month and a half to 2 month period, that's why you have to take the emotion out, to try to stay dead inside, and just take all emotion out of the marketplace. And so that's a big piece with our growers on wheat, because that harvest is coming fast. We're going to have an early harvest in southern Illinois, probably 2 to 3 weeks early. Same in eastern Indiana. Last piece I want to leave our growers with is, we're rural, and I have a piece I talk to in almost every meeting is our staff, and whether it be grain buyers, agronomy side, it doesn't matter. We've got a passion for rural, and we want to see rural succeed. And the only way to do that is making sure that our growers are making money. And we have to help the grower be profitable, because if that's not happening, rural can't survive. Our small towns don't get to survive. And that's one thing here is, as we look towards a good growing year in 26, we just want to make sure that, how can we help our small towns thrive and continue to survive? And that doesn't happen without a successful grower.
Yeah, couldn't have said it better myself, Scott. Appreciate those words. And wrapping up here today, appreciate everybody's time jumping on the podcast. And this is another edition of the Acre Advantage podcast.